Hello Wolfpack. This video has been made for a couple of reasons. One of the reasons is Bitcoin has managed to lose its descending triangle formation and break to the downside. As you can see on the hourly chart here, we'll look for a second. We can see, yeah, it's breaking to the downside, and we've seen some pretty bearish price action on that. And obviously the next major target we're going to be reaching, and we've already kind of reached it to a certain extent, is 53 to 54k for various reasons that I've stated dozens of times now that I'm not going to state again, because I simply just don't want to repeat myself for like the 5th time this week. So just go watch the previous videos if you want to know what I think is going to happen in that region. But essentially, just to break it down very, very quickly, I said that if we lose this triangle, which we've done now, provided we don't see a massive uptick in 3 seconds, but we've done that for the most part. We've lost the triangle. I said if we lose this triangle, we're going to be going to 53 to 54k, and from that region, we will most likely be seeing a bounce. Whether that is a dead cat bounce or an actual bounce to new all-time highs is heavily dependent on the state of the market when it happened, and it's happened very quickly. And to be honest, I'm not exactly 100% sure what to think of the market right now, because I can tell you right now that my price prediction for the market, 113k by January the 6th, has been invalidated. It's not going to happen, right? I don't think it's going to happen. At least, of course, there's a chance, but I just don't think it's going to happen anymore. You have to keep in mind that we made this price prediction in July, right? So we made this price prediction in July when we were down here in the 30k region. We've gone up massively, right? We went up to 67k. We were perfectly on track. Look how on track we were. I mean, we finalized prediction in October the 1st, but we made a general prediction to that region. I think 120k, I said, in July. And, we went pretty well, and there was much reason to believe that it would actually happen, right? We had the bottoming out in July, we had the retest of the bull market support band in September, and we moved upwards. And then we had that little correction in late October, early November, and then as it started extending into mid-November and late November, it started getting a little iffy, and that's where it's ultimately been invalidated. So the reason I don't want to say the 4-year cycle theory is completely invalidated is because it's not, right? It's not. We quite clearly have a 4-year cycle on Bitcoin, but it's not the 4-year cycle people would conventionally tell you about. It's the 4-year cycle in the sense that after the halving, there is a bull market, right? That's always going to remain. That's always going to be a thing. It's literally programmed into Bitcoin to happen. The 4-year cycle theory that has been partially invalidated at this point is the fact that, well, we top out in Q4 or early Q1. That doesn't seem to be the case right now. Now, look, here's the thing, and here's why I'm a little bit skeptical about what's happening in the market, because I think that there still is a considerable chance that we do top out in January the 6th, right, around that region. I think that the 113k prediction is completely off, right? I think there's a chance we top out maybe 70, 80, 75, 80k, whatever it might be, in that time period. And you have to take into account, and what I have been saying for months and months, I never said this price prediction was set in stone. If you watched any of my videos, you actually paid attention to what I was saying. I said that this is a guideline. And obviously that guideline has been a little bit less accurate than we would have expected. But what we're seeing now is the fact that we're seeing the third data point, right? So we have 1 data point, 2 data points, and 3 data points. And to make any kind of even rough conclusion based on extrapolation, you need to have 3 complete data points. And so what we were doing was merely, in the words of Benjamin Cohen, a dubious extrapolation of data, essentially. And so, look, this has left me puzzled a little bit here, because there are multiple reasons why I would be inclined to believe that lengthening cycles is playing out. There are also multiple reasons why I would be inclined to believe that the bull market top is already in. And I'll tell you both of those reasons in the video. And there's also multiple reasons why I would be inclined to believe that we're still heading towards a 4-year cycle theory top. It just won't be as high as people expect. All right, so ultimately, if you don't want to watch the whole video, basically I'm undecided right now. I need more time to think about it. I need more time to look into charts. I just wanted to make this video because this is kind of a moment in time where I realized, hey, I think that it's invalidated, right? We dropped below the triangle, and that triangle was completely critical for us to hold. But let's look into it for a second, all right? So we can see the major thing that I'm looking at, and the major thing that I look at in general when I look at the cyclical theory, is the bull market support band, right? The bull market support band is a very interesting thing. It's very interesting because when we actually successfully hold the bull market support band for support, right, and head to the upside to new all-time highs, we never actually cross below that price ever again. Okay, we held it here. We've never been below that price again, right? We held it for support all along here, We've never been below those prices again, never been below there again, never been below there again, never been below there again, right? Let's keep going. We held it here. We've never been below there again, never been below there again. We've never been below September again. And here's the thing. I don't think we're in a bear market, right? I don't think we're in a bear market particularly, okay? And that is one of the reasons, right? The bull market support band is probably one of the reasons. And it's the fact that, well, we held it in September, right? And we've never historically been below a price point in which we've held, again. So every time we hold the bull market support band, which is dozens of times now, I've just circled a few of them, we've never been below that price point again in the future. And the fact that we held the bull market support band at 40k in September, we would be inclined to believe that we won't go below 40k again. So, do I think we're in a bear market? No. I think that's the least likely kind of conclusion here. And you'll have to excuse me if I'm being a little bit slow. I'm trying to analyze this as I go ahead because I'm not fully decided myself here. And do I think we're in a bear market? Not particularly. No, I don't think we're in a bear market, right? I don't think that this was one big double top. I still stand by that. I don't think that. What I do think is still the most likely scenario, right? And I say that with a grain of salt. Most likely scenario is that we're still on track to top out in early January. I don't think it's going to be at 113k anymore. In fact, I'm going to delete that line. I don't think it's going to be at 113k. As to where it could be, we'll have to look into in later videos. I just simply haven't done the data analysis on that. Lengthening cycles is an interesting question. It's a very interesting question. It's definitely possible. The reason why lengthening cycles is hard for me to digest is the fact that, we are already lengthened. Okay, we are already lengthened. The cycle is already lengthened from the halving and from the bottom, right? So from those two metrics, the cycle is already lengthened. It's already lengthened from 2013 in just a few days, and it will be lengthened from 2017 in just a little bit. So, I do believe in lengthening cycles. Even my 4-year cycle prediction is a lengthening cycle prediction, right? It's 3 weeks lengthened. But as to whether it will lengthen even longer, I simply just, I find it hard to believe because I simply just haven't seen it happen in the past, right? We don't have enough data, and I think that lengthening cycles falls into the same problem. It's the fact that, we don't really have enough data to perfectly predict what the, cycle top's going to be and when it's going to be by the 4-year cycle theory. And that means we also don't have enough data to extrapolate the data and find out whether we're going to lengthen or not, right? It's just a general lack of data across the board. And this is why right now, I think the best thing to do is to go in blind. And I'm actually going to be deleting basically everything, right? I'm going to be deleting everything. I'm clearing the entire chart, and I'm sticking to the basics, right? And I'm doing this in real time right now. I'm sticking to the basics. The basics are that after the halving, every 4 years, we have a bull market, right? That bull market lasts a specific period of time. The bull market itself lengthens from the bottom and from the halving, right? That's what we agree on 100%. And it diminishes in returns, okay? What have we seen so far? We've seen the halving, we've seen a bull market, we've seen it lengthen from the halving and the bottom, and we've seen diminishing returns, okay? Unless we go to bloody 1 million, right? So everything kind of checks out already. And it's interesting, right? Because I have said in previous videos, and you guys would know this, I have said in previous videos that if we go down to 53k, I really would be more inclined to believe that it could be a dead cat bounce rather than an actual bull market continuation. Now, I don't know whether I'm ready to take that back or not. I think it still stands. We're not at 53k yet, and that's very important to note. And the basis of that theory is the fact that, I always said 53k will be a good bouncing zone, regardless of whether it's a dead cat bounce or not. 53k would be a good bouncing zone. We will most likely see an altcoin season at 53k, especially if Bitcoin doesn't bounce, right? If Bitcoin kind of has a little and then drops down, that's where we're going to be seeing an altcoin season. Now, the reason why I've kind of gone back on this, and I'm kind of thinking we're not actually going to see a bear market, is the fact that, as I just said before, we've never gone below a place in the bull market support band that we've held in the past. We've also never retested the bull market support band in November, ever, right? We've never retested the bull market support band so closely after we retested it in September in history. Okay, and this is one of the reasons why lengthening cycles doesn't make sense to me either, right? And this is why one of the reasons why not much is making sense to me right now as well, is the fact that every single bull market we have seen a September retest of the bull market support band, right? September retest of the bull market support band. And we can see that, I think even in 20, this wasn't really a bull market, doesn't really particularly count here, but even in 2012 here, we saw a retest of the bull market support band in September before a run up and the start of the 2013, 2014 bull market, even before halvings even really existed, right? It just happens every time. What doesn't happen every time is a retest of the bull market support band in November. Right, and we do see red Novembers typically in bull markets. We did have one in 2013 as well. We just can't see it on the weekly chart because it's too compacted. But we don't see them come all the way down to the bull market support band. And we're not at that point yet, right? But if we do get to that point, it's just going to add confusion to the plate. And it's just going to invalidate even more. And I think that, people who believe in lengthening cycles, which I'm not totally opposed to, by the way, I'm just completely undecided at this point, will be shocked to see that maybe even lengthening cycles isn't actually how it's going to play out. Because it seems like if we go to 53k, yes, in terms of technical analysis on a base level, the structure is going to remain in a bullish fashion. But things are going to happen that we simply haven't seen before. So ultimately, guys, I don't really know. Right, I don't really know. I'm going to have to look into it a lot more. I thought it was worth just making a quick video, just freestyling it quickly and just saying, hey, I don't think my price prediction is going to work out anymore. And I think that we should be constantly looking within the next few weeks to see what's going to happen next on a macro scale. What I can say is the fact that when this cycle tops out, whenever it may be, and when we see the next bull market, we can be much more confident in our price predictions because we will have, 1, 2, 3 data points, 3 sample points of data. To make any scientific connection in terms of correlation, in terms of, what you're going to use to extrapolate, you really do need to have 3 sample points completed. And we're kind of jumping the gun a little bit, and I think everyone is, to a certain extent. I think that when this cycle tops out, we will have that data and we can be more accurate for next cycles, because there certainly is a 4-year cycle theory, right? Bull markets happen after the halving. There certainly is a lengthening cycle theory that is correct as well. The cycles do lengthen, right? That's just a fact. And diminishing returns certainly exist as well. But I think trying to piece it all together with such a limited amount of data is not necessarily a good idea. But the fundamental principles of the 4-year cycle theory still remain. Okay, we still see red Septembers, we still see bottoming out in July, we still see topping out in May. All of this is sound so far, and so my thought process was that if all of that has happened, right, plus more, why wouldn't the top out be in a relatively, a close compacted time period to in previous, right? It was November in 2013, December in 2017, and January in 2022, which I supposed. And I still think that's a possibility. I'm not discounting anything. I would say the most likely scenario, in my personal opinion, in my head, is that we do top out in January 2022, not in the 100k region. I don't think we're going to be reaching 100k. But again, I simply just, I'm going in blind here, and I really want to clarify that with you guys. I really am going in blind. I don't think that this invalidates all of the fractals we've had for altcoins, etc., because fractals do repeat, right? And even though this hasn't repeated perfectly, it's pretty clear that this whole movement here is just one big fractal. And, whether the specifics play out how we expect it, whether you're in the lengthening cycles team or the 4-year cycle team, the best case scenario, or the best thing you can do, rather, is wait for it to happen and apply it in future cycles. I think for now, and I say this, take it with a grain of salt, haven't really done too much extensive looking into it. For now, I'm going in blind, right? I think that 53k is a good bouncing zone, at least in the short term, at least for buying some altcoins in the short term, get some scalping. I've already done that, right? We reached 54.3k, I already did some scalping, and I've got some altcoins in my bag right now. But I think, the most fundamental thing we need to be looking at is the shorter term charts now. Okay, because it's clear that the longer term charts are giving us some misleading, things on a larger scale. There's a lot of misleading evidence that isn't necessarily supported by an exponentially large pool of sample points. So we need to be looking at the shorter term. The shorter term is this, right? And let's pull up the daily chart quickly. The shorter term is the fact that we've broken this descending triangle to the downside, we might have an opportunity to come back and swing back for daily close. That's always a possibility. We do have a very, very slight bullish divergence, right? That isn't really confirmed yet because the candle hasn't closed. That's good to see. I'll bring that back up for a second. Actually, we do have a downtrending RSI resistance that we need to be breaking through for a bullish continuation. We are primed for a MACD cross. Okay, if we see some green. As for the stochastic RSI, we've bottomed out entirely. Okay, we've bottomed out entirely. We're ready to move on that. 53k is a major support zone. We've got our bull market support zone in that region. We've got the 100 SMA in that region that we've just bounced off. Actually, the Bollinger Bands are showing that we're kind of in a pretty oversold territory. So everything is saying we're oversold. Everything is saying we will bounce in the short term, at least in the short term at 53k. And from that point, I'm just going to be playing it by ear. What I will say is another interesting thing about Bitcoin that I've noticed over the past couple of days is a unique trend line that I haven't really shown you guys on this YouTube channel yet. And if I can remember it off by heart here, I think it's something like this. All right, let me bring it up here. Something like this, okay? And you can see that we have pretty clear retests here. Retest, retest, retest. And we've retested it 3 times, and we're unable to break through. So once we break that as well, that would be a good sign. Another thing we can look at is we'll bring up the VVPR with the volume profile and the visible range, and we'll make this a little bit bigger so we can see more bars here. 150 should be fine. We can see that the VVPR is showing that at 63k, if we zoom up here, 61.2k, sorry, 61.1k, 61.2k is a critical region we need to be taking back in order to get some bullish momentum back in the market as well. So ultimately, guys, I'm playing it by ear. I'm going in blind to a certain extent. There are critical zones that I've outlined in previous videos that still stand by regardless of what the cyclical theory says. I've said to you guys, I've always said this and maintained this, be cautious. I said it from 62k, I think. I can't remember exactly. 60k maybe. I said if we lose 60k, be cautious. I said if we lose 58.5k, my theory is going to start to get invalidated. We lost that region, started to get invalidated. It seems fully invalidated now. I said if we lose that descending triangle, get cautious. We've lost that, okay? And now we're coming up in 53k, which is by far the most critical time of this entire year in Bitcoin, okay? If we lose 53k, I would go as far to say as it's a bear market, 100%. Okay, if we lose the bull market support band, we've never really lost it and not gone downwards for an extended period of time. Just take this as an example, right? We're in a bull market, we lost the bull market support band, we came down here, we bounced around for like 3 or 4 months, okay? So if we lose the bull market support band, whether we see a conventional bear market or not that goes for 3 years is another question, but what we will be seeing for sure is a bearish phase in the market lasting at least a few months. Okay, and I think everyone can agree on that. 53k is absolutely critical for Bitcoin. We cannot lose that level if we want to see bullish price action within the next couple of months. Thanks for watching, guys. Sorry for the vagueness of this video. I'm trying to work it all out for myself. It is a pretty scattered market right now. What I can say is positive is we've been conservative and it's paid off. All right, we've been conservative and it's paid off. It always pays to be conservative. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.